What's up, everybody? I've got a quick video for you. I'm a little busy, as you can see, but I just wanted to upload this clip from Saylor. Just came out as of this upload, November 3, on the Market Watch crypto investing digital event. But we're going to get into this. Sorry, I'm not going to do a bunch of editing. I'm not near my computer. I'm a little busy, but I just wanted to show you guys this because it is locked behind a subscription. So let's get into this one. I will be back later today to give you guys another update. Thanks again.
Thanks for joining us, Michael.
Thanks for having me, Avi.
I'm sure audience will have a lot of questions too, so please get them in early, audience members, so we can address as many as possible. MicroStrategy is a very unique business. It's a software company. It also has about $7 billion in Bitcoin on its balance sheet. How do you describe what MicroStrategy is, and what do you expect it to become in the next few years?
Well, you know, it's kind of like Harvard University or Yale or Stanford. You've got an operating mission and you've got an endowment. MicroStrategy's operating mission is we create the world's best business intelligence software, and we sell it all across the world. It's about a $500 million business. It's growing. It's profitable, generates a lot of cash flow. But last year, we found that we were holding a bunch of cash and treasuries, and we were looking at a negative real yield, and we didn't want to diminish the purchasing power of that treasury. So looking out toward the future, we decided to convert that to Bitcoin. So we started with $250 million of capital invested in Bitcoin, and eventually it became about $500 million. And today we have about $7 billion of Bitcoin. And so we have a very large endowment. And we view Bitcoin as a very scarce digital property. So the two missions, acquire and hold Bitcoin, and then grow the enterprise business intelligence business, they go hand in hand.
Okay. Some people obviously do, I think, buy MicroStrategy in order to buy the Bitcoin essentially on your balance sheet. But now there are more and more ways to get exposure to Bitcoin. One of them is, I guess, to buy MicroStrategy, but there's also obviously these two new Bitcoin ETFs. There are a lot of other ways to play Bitcoin. You can obviously buy it directly. You can buy miners. How do you think investors can navigate this kind of thing?
Well, I think the idea of Bitcoin is scarce digital property. If you want to hold the underlying property, you would set up a relationship with a Bitcoin exchange, and then you have to master the custody and the compliance issues. Now, some investors can invest in anything, but many investors are required to only hold publicly traded securities, or they could only hold debt instruments. So if you have the time and the charter and you can hold the Bitcoin, then that's one good idea. If Bitcoin doubles, you'll double your money. If Bitcoin goes to zero, you'll lose your money. Now, if you start to move into securities that have exposure to Bitcoin, you have different situations. If you buy a Bitcoin ETF that was perfect against the spot market, it would also be linear 1-to-1. There is no Bitcoin ETF like that right now. If you bought MicroStrategy, you're getting a leveraged long Bitcoin position. The advantage is, maybe we're security and you can only invest in securities. If you buy $100 million of MicroStrategy, we're part of your prime brokerage collateral package. You could borrow at SOFR plus 50 basis points. So it has certain financing benefits. It has certain charter benefits. You could make the decision in a few minutes. And then we have leverage. We borrowed about $2.2 billion at a blended rate of 1.5% interest and bought Bitcoin. And so people that invest in us are kind of investing in a company that's going to be an operating company that also manages Bitcoin leverage intelligently. And we take the custody and the compliance and the security headaches off your back. I think that other people are going to want to invest in Bitcoin miners. Miners have other types of leverage because they're mining Bitcoin into the future. You have to evaluate each one of them based upon how much Bitcoin you think they're going to mine, and then what's your entry point. But Avi, I don't think there's a right answer for anybody. If you're enjoined from buying property or investing in property, then you have to buy the security. On the other hand, if you want to own the property and you can, the advantage of that is you could shift the property without any taxable event between lots of counterparties as it suits you. So I think that every investor has portfolio with the charter, and they've got relationships, and they can pick and choose. We have more options today than we had a year ago, and I think that's the good thing about the market.
You use the word leverage and Bitcoin. Those are two sort of hot words. People who are nervous about leverage, obviously, and nervous about Bitcoin at the same time might be anxious about putting money into MicroStrategy. Also, there are times when it trades at a premium to the Bitcoin you hold. How do you, answer people who say, MicroStrategy might not be the best way for me to hold Bitcoin, or it makes me anxious that there's leverage involved in this investment?
Yeah. Well, I mean, there are different types of leverage. If you were trading with a margin loan 20-1 on an offshore exchange, and you get mark to market every minute of the day, then that's kind of a risky, scary leverage. If you have a 30-year mortgage on a house that is not marked to market, and you're paying 2.5% interest, and the monetary inflation rate is 15% a year, it's a screaming good idea to basically take the mortgage and buy high quality property. MicroStrategy's in the middle. We've got debt that's dated 5 to 7 years out, and our blended cost of the debt is like 1.5%. So it's very inexpensive debt, and it's not marked to market. We don't have margin loans. In fact, 1.7 billion of the debt isn't even secured against anything. There's no collateral. So I think that we have a very good low cost capital to get that leverage. And that's what allowed us to generate a $4 billion investment profit on the Bitcoin in the past 12 months. If you don't want to invest in, if you had $1 million and you get leverage interest in Bitcoin, and Bitcoin doubles, you may quadruple your money, right? And if Bitcoin goes to zero, you lose the million. If you want to invest $1 million and Bitcoin doubles and you get another million, then that's a different proposition. I think that investors are pretty smart. You have a big portfolio. Do you want 1% exposure or 2% exposure? And do you want to leverage bet or not? There are a lot of people that would do calls and puts and futures and Bitcoin futures to get other types of leverage. The truth is, we have investors that are invested in our derivatives. We have investors invested in the convertible note. We have investors invested in our senior secured debt, which yields 6 1/8% nominal interest. And we have investors invested in our equity. And I encourage all investors to go buy some Bitcoin. And they're all just different ways to get exposure to the asset class, depending upon your risk tolerance and your charter.
Okay, that's a good entree to remind our viewers to send in questions. We have one of the world's most interesting Bitcoin investors here today, and he's here to answer our questions. You talk about, like you said, you're encouraging people to invest in Bitcoin. A lot of people have told me that you're one of the most important sort of evangelists for Bitcoin. Last year, you got a lot of people, with serious money to invest. Sometimes I think it took a little while to get them to agree with you, but obviously several of them did. Are you finding it sort of easier to get people to get on board now, given the gains and some of the institutionalization, or is it still kind of one by one kind of adding new investors into this asset class?
It was a new idea for institutional investors in August of last year when we bought our first $250 million position. But if you look at the last 12 months, this has been a 12 months of political turbulence and monetary inflation. Gold is down 7%. Bonds are down about 7%. The S&P index is up 34%. Bitcoin's up 350%. Right. And all those macro investors and institutional investors have seen that gold doesn't work as an inflation hedge. You can see Bitcoin is digital gold. You can see that it's doing a better job of managing monetary inflation than just holding a market basket of equities. And I think that as you look forward, what people are beginning to realize is, first of all, it is digital gold. We just had a sitting senator of the United States on CNBC this week declare that loudly. It is digital gold. But digital gold was the idea. I take $1 billion and I put it into a metal as a bearer instrument, and it's non-sovereign store of value. The problem with gold is you can't lease it out and you can't move it very easily, and it's hard to mortgage it. And so a lot of people that wanted to do wealth preservation would buy $1 billion of buildings. They buy commercial real estate or property. Now, the idea of Bitcoin as digital gold is the beginning. The real big idea is digital property. What if I could buy $1 billion hotel in cyberspace and I could lease it out and I could put a mortgage on it and I could move it at the speed of light and it had all the benefits of gold, all the benefits of a building, all the benefits of land, and you can't make any more of it. And if everybody on earth desired this scarce asset, and if every technology company wanted to build this into their iPhone or their website or their fintech application, you would have something very interesting. And I think that right now, investors are realizing, much to their horror, gold doesn't work. They're realizing Bitcoin is digital gold. And now they're starting to realize, based upon the successes of Square and PayPal and Coinbase and Robinhood, that this is a lot more than digital gold. This is digital property, and it's a global phenomenon we have never seen in this world.
For people, though, let's say someone agrees with you conceptually, comparing it to gold makes a certain sense. At the same time, though, gold doesn't necessarily fall 40 or 50%, in a matter of a month, which Bitcoin has done. How do you, if somebody's looking for this as a quote unquote safe asset, how do they get comfortable with Bitcoin?
When Bitcoin gets to $10 million a coin, the volatility will be down around the level of gold, and you will have missed the opportunity of your lifetime, right? The volatility is the price you pay to outperform the S&P by a factor of 10 for 10 years straight, right? And the reason the volatility is there is because the entire world is coming to grips with a totally new paradigm shifting idea. And also because Bitcoin is plugged into the crypto economy, and the rest of the crypto economy is exchanges offshore trading with 20x leverage 24/7, 365 with thin liquidity and cross-collateralized altcoins. So you got to take the good with the bad, right? The good is this is the highest velocity, money you've ever seen in your life. The bad is it's volatile. The good is it outperformed the S&P by a factor of 10 every year for a decade. And so I would counsel anybody, if your number one concern is volatility, put your money in the dollar. And if you don't want to do that, you buy an index of S&P. Just buy the S&P index. It's a very conventional idea. But you're going to have returns that are going to be 1/10 of what you would get if you can strap in and take the volatility. I wouldn't buy Bitcoin for 10 minutes if you're not ready to hold it for 10 years. It's an old Warren Buffett quote, but it's still true with regard to this asset class. So the right way to think of it, Avi, is what percentage of your portfolio are you willing to save for a decade and bet on a long-term trend without checking the price every minute? And that part you ought to put into Bitcoin, because Bitcoin is big tech, with digital gold, right? It's gold perfected on a big tech network, but without the CEO, without the board of directors, without the product cycles, without the supply chains, without the employee base. It's just the idea of moving monetary value at the speed of light and programming it at the speed of a computer chip. That's what makes it rational.
Okay. And, you talk about some of the capabilities of crypto and like you said, almost renting an apartment in the metaverse. But that actually seems to be done more on the Ethereum blockchain. I'm curious if, Bitcoin is sort of gold, it's a rock in some ways. Why not invest in Ethereum, which seems to be where a lot of the applications of crypto are happening now? You can divide the crypto world into two parts. Bitcoin, which is real money with real energy on a decentralized technical network that's meant to be digital energy, digital property, digital money that'll last forever. And the innovation in that part of the economy is on the fintech applications that plug into Bitcoin. So all the speed and functionality
comes from the PayPals, the Squares, the Coinbases, the banks, the MicroStrategies, the NYDIGs that plug into the Bitcoin, right? That's one part of the economy. The other part of the crypto world is the crypto world of smart contracts and security tokens and DeFi. They're really attempting to dematerialize the banking establishment, whereas Bitcoin wants to dematerialize all the property, all the money, all the gold, right, in the world. The other crypto economy is trying to dematerialize JP Morgan, the traditional banking establishment. They want to run the functions of a bank and a stock exchange 24/7, 365 at a higher speed without human intervention. They're very different investment propositions. Okay. Crypto is for tech VC investors at this stage in his life, whereas Bitcoin is for a macro investor that wants a store of value to give to their grandchildren.
Okay. We're starting to get some questions from listeners, so I just want to run some of these by you. Robert asks, at what point as a public company representing stockholders does holding Bitcoin, which is volatile, become incompatible?
Well, our stock was trading $120 a share before we did this. And if we had taken the other path, our stock would probably be $60 a share. So today it's $780 a share. We're up 550%. And our shareholders have made billions and billions of dollars. So I think the shareholders are quite fine with the strategy. What we did is we solved the problems of compliance and custody and acquisition and security of digital property. And our shareholders didn't have to solve that problem. They were able to just come along for the ride. And we layered on top of that execution, we also layered leverage. And how many people can go and borrow $1 billion at 0% interest? Because we did, right? So from a shareholder point of view, if I had a company that could borrow money at 0% interest and invest in something that's going up 400% a year, and then all I had to do was wait, it's a pretty good idea for the shareholder. Now, if you don't like Bitcoin, you shouldn't hold our shares, but we were very transparent about telegraphing what we were going to do. We told the market before we did it. Then when we did it, we bought back $250 million. We offered $250 million Dutch auction to let anybody out at a premium if they didn't like the strategy. And then after the Dutch auction, we kept with that strategy. And I don't think you could be more transparent and telegraph your moves in a more methodic way than we did. So I think that, in fact, I'll turn this around. It's irresponsible for a publicly traded company to hold billions of dollars of treasury reserve assets in USD or in short-dated sovereign debt if the negative real yield is minus 10, 20, or 30%. And right now, if I was a shareholder and I had a company that I was invested in with $100 billion in cash and the S&P went up 34% year over year, I would say that there's a minus 34% negative real yield on the cash. You burned $34 billion in 12 months. So that's really what's important from a shareholder point of view. You got to either give the cash back so that someone else can invest it in the S&P index, or you have to beat the index. And when you do that, you should do that with transparency and I think and integrity, and we did that.
I think that's a message to Apple is what you're trying to send. I'm curious, we've got a few more questions about other crypto assets. I wanted to lump those together so you can take a crack at it. Charles asked, what's the second best crypto asset? You're clearly a Bitcoin bull. And Joseph asked, what are your thoughts on Ethereum, Solana, and XRP?
The entire crypto ecosystem, it's tech venture capital. And there's a lot of regulatory uncertainty. There's going to be securities issues with the SEC. There's going to be CFTC issues for trading derivatives. There's going to be banking issues. And if you're a tech VC and you can navigate and parse through that, then those are reasonable risks for you to take. Bitcoin is settled as digital property, right? You don't have those questions. It's pretty obvious what it is. You're buying Bitcoin in lieu of gold, in lieu of the S&P index, or in lieu of just holding large amounts of bonds. I think they're very divided. What was the second question?
That was essentially if you had recommendations for other cryptocurrencies. You know, someone did mention in particular Ethereum, Solana, and XRP as.
I don't think an institutional investor can invest in anything other than Bitcoin. Bitcoin's the only crypto asset that passes the MicroStrategy test, which is, will it be banned? Will it be copied? Will it be hacked? It's clear it won't be banned. It can't be copied. It hasn't been hacked. Everything else is a venture capital investment. There's going to be a massive shakeout. 99% of these things are going to fail. So I wouldn't tell you not to be a VC. You can invest in one of 10,000 Instagram knockoffs too. You can do it if you're a VC. But if you're an institutional investor and you're considering something in lieu of treasuries or cash on your balance sheet, then Bitcoin is really the only choice.
Okay. All right. We definitely know your feelings on Bitcoin. Thank you very much, Michael. This has been a great panel, and I appreciate your time on this.
Thanks, Avi.